All right, let's break down the most talked about, most divisive company on the planet, Tesla Inc. As we look at the board with the markets closed, we see the final print from Friday, November 7th, 2025. The stock closed at $429.52 per share. That's a nasty finish to the week, down $16.39 or 3.68% on the day. Now, the immediate expectation for anyone who has followed Tesla stock is that this is just another volatile day, another buy-the-dip opportunity in a long, unstoppable march towards the future. That's the story. But the reality, and what that $429 price tag and that nearly 4% drop really represent, is a fundamental crack in that story. The market is finally, and painfully, reacting to the news that emerged from this week's annual shareholder meeting. It's not the news you think. It's not about the newly approved, eye-watering $1 trillion pay package for Elon Musk. The market is reacting to the lack of anything else. That 3.7% drop coming after the shareholder meeting wasn't a celebration. It was a sell-the-news event in the worst way. Shareholders approved the massive pay package, which was expected, but what else did they get? They got more promises. Promises of a cybercab that starts production in April 2026, promises of a redesigned semi-truck, promises that the AI 5 chip by 2027, promises that the Optimus robot will one day perform surgery. What the market heard was not what's next, but not now. The market is finally asking, where is the profit today? The reality is that while Tesla talks about AI, its core auto business is in a street fight. The aggressive price cuts that Tesla initiated to maintain volume have come back to haunt it. Automotive gross margins, once the envy of the industry at over 30%, are now crushed. They are in the mid-teens, barely above those of the legacy automakers Tesla was supposed to make extinct. That is not an AI company valuation, that is a cyclical, low-margin car company valuation. Let's look at the recent stock movement and the fundamentals driving it, because this is where the investment help is really needed. That 3.7% drop is the culmination of a brutal quarter. We've seen record deliveries, yes, but at what cost? Q3 earnings, released just a few weeks ago, were a perfect example of this. Record revenue, but a massive decline in profit. Net income fell by more than 25% year over year. Why? Because the average selling price of a Tesla vehicle has fallen by nearly 20% in the last year. They are running faster just to stay in the same place. And now they're not even the biggest. In the first 3 quarters of 2025, BYD, the Chinese competitor, has officially sold more pure electric vehicles than Tesla, to the tune of 1.61 million to 1.22 million. This isn't a future threat. This is a present-day reality. This is the kind of data that professional traders on the Interactive Brokers platform are looking at, not the moon buggy stories from the shareholder meeting. They are using their Interactive Brokers trading tools to short the stock, while many retail investors on SoFi Investing or Robinhood are left holding the bag, wondering why the stock is going down. And what about the other promises? Let's talk about the Cybertruck. After years of waiting, it's here. Sort of. The production ramp has been agonizingly slow, and the company itself has warned it will be a cash drain for the foreseeable future. It's a low-volume, high-cost halo product in a market that is demanding affordability. Then there's full self-driving. The shareholder meeting promised FSD unsupervised is just a few months away. This is a promise that has been a few months away for about 8 years. The reality is that FSD is still a Level 2 driver assist system, and regulators are circling. While the software is impressive, it is not the robotaxi generating goldmine that the valuation implies. It is not generating the kind of revenue that can offset the margin collapse in the car business. This is the disconnect. You have a Fidelity brokerage account where you hold Fidelity mutual funds that are stable. And then you have Tesla stock, which is a pure bet on a future that seems to be perpetually just over the horizon. This is the central dilemma for every investor, from the person using Robinhood fractional shares to get a tiny piece to the high net worth individual with a massive individual brokerage account. What is this company? Is it the collection of SoFi ETFs and Fidelity ETFs that frame it as a tech leader? Or is it what the numbers now show, a car company? The business model is at an inflection point. The old model was selling high-margin Model 3s and Ys, supplemented by regulatory credits. The new model, the promised model, is one of software, FSD, energy, megapacks, and robotics, Optimus. But the energy business, while growing, is still a small part of the whole, and the robotics business is, for now, a science project. The company is in a transition period, and the market hates it. This is where an intelligent portfolio can get completely broken by one stock's volatility. It's not like Nvidia stock, which sells the picks and shovels to everyone. It's not like SoFi or other investing sites that are B2C services. Tesla is trying to do everything, all at once, and the core business is sputtering. So what is the path forward from $429.52? The bull case, which analysts like Wedbush who have $600 target are clinging to, is that this is the moment of maximum pain before the hockey stick growth. They believe the pay package secures Musk's focus, they believe FSD will be solved, the cybercab will launch, and the AI story will become the only story. They believe you're buying the next trillion-dollar AI company. The bear case is much simpler. It's that the competition is here, it is real, and it is beating Tesla on price, and in some cases, global volume. The bear case is that margins will never return to their former glory, that FSD will remain a supervised product, and that the stock is fundamentally a car company with a 200x PE ratio, which is absurd. They see a path back to $150. This is the kind of high-stakes environment where a person's SoFi active investing strategy on the SoFi trading platform or their Interactive Broker stock trading on their Interactive Brokers account, despite the low Interactive Brokers fees, becomes a 24/7 stress test. This all comes down to one central, almost philosophical question about what you believe Tesla is. This is the most divisive stock on the planet, and I want to know what you think. Comment below with just one word: car or AI. What is Tesla today? To summarize, that $429.52 closing price and that 3.7% gash to end the week is the market's brutal way of forcing a reassessment. The shareholder meeting has come and gone. The expectation, reinforced by the CEO and his new pay package, is a future of robotaxis, humanoid robots, and moon buggies. It's an AI company priced for a multi-trillion-dollar future, a must-own for every Fidelity IRA account. But the reality, reflected in the Q3 earnings, in the Chinese sales data, and in this stock chart, is that of a cyclical, high-end auto manufacturer that is losing a price war it started, with its margins collapsing and its core product demand now in question. The gap between that glorious expectation and this very grim present-day reality is where all the volatility, all the risk, and all the sleepless nights for investors live.